At home. Well, the U.S. is gearing up to slap tariffs on more Chinese goods. And this morning, President Trump is trying to reassure farmers who are caught in the middle of this conflict between the U.S. and China. Jessica Smith is live in Washington with the latest. Jessica.
Well, the president is tweeting quite a bit about trade again this morning in one tweet saying we will make a deal with China when the time is right. But in the meantime, the president is happy with the tariffs in place. He insists on that the U.S. is bringing billions of dollars every year from these tariffs. And the United States trade representative took a step toward putting another round of tariffs in place yesterday, posting a list of Chinese goods that could be the target of a 25% tariff. It's $300 billion worth of Chinese goods, including consumer goods, food, shoes, milk, all kinds of stuff. I mean, everything you can imagine on this list of $300 billion worth of goods. Now, the president does say that he expects retaliation on U.S. farmers, but he says that he is ready to help farmers through that. He tweeted this morning, you saw it there on the screen, when he says that farmers will actually be one of the biggest beneficiaries of what's happening right now. He says hopefully China will do us the honor of continuing to buy our great farm product. But if not, your country will be making up the difference. We did reach out to USDA to see if they had any kind of guidance on what that plan could be, but we have not heard back yet. And the president did talk about the latest on this China trade situation last night at an event. He gave us a little bit of a timeline when he referenced his Treasury Secretary, Steve Mnuchin. Take a listen.
Steve just got back from China. We'll let you know in about 3 or 4 weeks whether or not it was successful. You never really know, right? But I have a feeling it's going to be very successful.
So the president saying we should know in 3 to 4 weeks there. Now, China has already vowed to retaliate. It says it will hike tariffs on $60 billion in American goods. And in response to this latest rhetoric from the president, the Chinese newspaper, the People's Daily, posted this graphic that you see on its WeChat account here. It says, negotiate sure, fight anytime, bully us, wishful thinking. Now, the president did say he plans to meet with President Xi at the G20 in June. There are no scheduled trade talks face-to-face between now and then, but we will be waiting to see if maybe they announce another round of talks before the G20.
All right, Jessica Smith, live in D.C.
And joining us to talk more about how markets are responding to the latest uncertainty around U.S.-China trade is Chief Market Strategist at Riverfront Investment Group, Kevin Nicholson. Kevin, good to have you on this morning. I want to just get your thoughts on these latest Trump tweets because, you know, whether it's that G20 meeting that he has said is set with Xi Jinping or what he's talking about today, you know, there's no response from the Chinese side to really confirm that these meetings have been set. There are discussions happening. How much do you think investors should actually take these tweets at face value?
Well, I think that the investors really have to watch the tweets and look at them with a grain of salt because, you know, the president a lot of times puts tweets out there and then he'll change his mind. And so I think that you really have to pay attention to the fundamentals. The fundamentals here haven't changed. You know, I think that both sides thought they were operating from a position of strength, and they've backed themselves in kind of a corner, and you know, and they're going to have to work their way out of it. And for the U.S., I think they had the upper hand in the negotiations right now because China definitely has been slowing. Yes, they posted good GDP growth last quarter. However, you saw their exports, their net trade actually fall over the last month or so. And so when you look back from 7 months ago, it was down about 41%. So I really think that what you're going to see is that they're going to come to an agreement eventually. It just depends on how long it's going to take to play out.
So the fundamentals may not have changed as of now, but is there an argument to be made here that if in fact these tariffs go through, that would significantly change the game for a lot of these companies? If you look at the potential 25% on $300 billion in Chinese goods coming in, you look at that very long list, that goes to the heart of consumer products, and that would certainly be a significant tax on consumers here in the U.S. I mean, how do you break down that in terms of how significant of a hit that would be for sentiment?
Well, I mean, I think that it would be a huge hit for sentiment because when you look at it, China has the ability to allow their currency to depreciate. And if they do that, they're going they're not going to bear the brunt of the tariff. The brunt of the tariffs are going to be borne by the U.S. consumer at the end of the day. And so if they were to go through with the additional $300 billion worth of tariffs and put 25% tariff on there, the U.S. consumer is going to bear the brunt of that. And that's going to cause demand to slow. And I think that, you're going to see the market sell off. Right now, the market has been able to hold at the top of what our decision box is at 2810. However, we feel that if this thing gets drawn out for any length of time, then you're going to go back into what we deem to be our old decision box of that 2640 to 2800 range, and it could potentially trade to the bottom of that range. But we don't think that is what's going to happen. We really believe that they're going to come up with an agreement over the next couple of months. You will kind of stay around this 2,800 to 2,900 range is kind of what we're expecting, as long as things don't turn too negative.
Okay, we'll leave it on that positive note. Kevin, appreciate your time this morning.
Thank you.